Today, we're talking finance and travel. So, we have a special sit-down exclusive interview with the Managing Director of Access Bank, Herbert Wigwe. Access Bank is one of Nigeria's foremost systemically important Tier 1 banks. With a market cap of more than 293 million naira, its share price is currently at 10 naira. Last week, the bank released its half-year results with gross earnings growing by 42% to 246 billion naira profit before tax. That's for the period rising to 52 billion naira, representing an 18% growth compared to 43.9 billion in half-year 2016. The bank beat profit and earnings forecasts and is on course to join the elite club of Nigerian banks, reporting profits in excess of 100 billion naira by the end of the year. Today, we have the great honor of being joined in studio by the Managing Director of Access Bank, Herbert Wigwe, interviewed by the Executive Director of This Day and Arise Groups and Editor of This Day, Ijeoma Nwogwugwu. Over to you.
Thank you very much, Herbert, for joining us at the studio. We'd like to first start off with at the micro level by focusing on the bank. We noted that you improved your earnings increased by 42%, and you have your earnings and your profit before tax and your profit after tax. But however, the bank recorded a decline in its second quarter net interest income, profit before and after tax, relative to the last quarter. We also noted that other than the AMCON levy, which weighed on your operating expenses, this might have had to do with the impairment charge you might have had to take on your P&L. To what extent did the Etisalat or 9 mobile loan contribute to this, to your bottom line?
Well, we had to take a collective impairment as far as EMTS is concerned, because obviously, given all the issues that were happening in the market, we had to basically downgrade the asset quality. Yeah. And what that meant was that there was an increased collective impairment. Now, if you look at our exposure to Etisalat, the direct exposure may not appear to be that significant, but we do have exposures to other companies that do business with EMTS and that are still going concerns with different levels of security or recourse and all of that. But on EMTS specifically, there was an increase in the collective impairment. We also took additional impairments with respect to those other exposures. So that's where we are on it. So it led to an increase, if you like, as far as impairments on a collective basis is concerned between last quarter and this quarter by over 100%, yes.
So how much exactly did you provide in terms of the Etisalat loan?
It will be about
we do know that Zenith Bank made a provision of 30%. So how much was your provision?
Well, let me put it this way: on the straight impairment, on the straight Etisalat exposure, which is about 11 billion naira, we took
that is your bank.
Yes, yes, we took about 30%. However, remember, like I said, that there are other interconnected exposures. All right, the level of collective impairment on those was a bit less.
Okay, so what's the current status with the Etisalat loan now? What are the banks doing, the consortium of banks doing in terms of ensuring that they get new investors for the company and get also, of course, the company telco to pay for its loan, and especially its former shareholder, Etisalat of United Arab Emirates? What is the status, right?
Okay, well, there are about 3 questions you just asked.
Yes, I know.
First of all, what we've done is to prepare the company for sale. So we have a management team that is working on it. The second is that we've appointed sell-side advisors who are actually now taking in bids from people who are interested. We have a live data room, all right, a virtual data room that is live, all right, for people to basically start doing due diligence soon. Until that we can conclude a sale very, very, very quickly. But with respect to their parents, I think as a starting point, nobody walks into a system and takes so much loans and wakes up and says, "Oh, I've gone." It doesn't happen. All right. So they still remain, if you like. We still have recourse to them, and that is a secondary level issue. The most important thing now is let us sell the company and let us see how much we can get to defray the exposures that we have.
Okay. Okay, let's move on. We've also realized that a lot of banks, such as yours, their earnings improved as a result of foreign trading income, foreign exchange trading income. However, there are still concerns about the volatility in forex trading.
Yes.
And how this can impact, say, your return on equity and even your profits. So what is your bank doing to safeguard against such volatility?
Well, we occupy a very prime position as far as trading in derivatives or in foreign exchange and all of that is concerned. We've made money from it for the past 15 years, year in, year out. You just need to understand how it works. And you need to understand the risk management processes you need to put in place to make sure, all right, that you are protected. I think all of that trading is geared towards a couple of things. First, it increases the level of deepening and liquidity of the market. So in the past, you didn't have futures, now you have futures. We're trading forwards, and the forwards were necessary to support customers. So we're not just creating fictitious or we're just not, it's not out of a bubble, it's out of a customer demand and enhanced liquidity in the markets. Now, there are different things you can do with your currency. You can either trade currencies or you can lend your dollars, all right, whichever one, all right, it will throw out whatever returns, depending on how you choose to optimize your balance sheet. But having said that, of course, when the market is less volatile, obviously, all right, what you tend to see is that there are less returns to be made from it, if you get the point I'm trying to make.
I think so.
Yes, they can be.
But the risks are higher.
The risks are higher in more volatile markets, understood. But again, remember that you have open position limits, you have dealer limits. There are all sorts of limits that are put in place to basically ensure that you remain within the risk appetite which you choose to play in.
Let's move on to the economy in general. The managers of the economy are quite gung-ho that the Nigerian economy might exit the recession before the end of the year. But then again, a lot of analysts are concerned that even if the economy does grow by the end of the year, it might be muted. To what extent, in your assessment, will this impact on households and even businesses that the banks have to deal with?
I think we still need to address the fundamentals of our economy. I think we need to pay a lot of attention to agric. I think we need to pay a lot of attention to SME. Most importantly, I think we need to pay a lot of attention to the power sector, which drives all of these things. Today, the critical engine for growth is between agric and largely oil prices, if you like. Now, we can achieve double-digit growth in GDP without any change in oil prices once we address power. All right, so I think it's muted, and I think, in my mind, even exiting that recession, all right, as quickly as people are expecting, if you understand. For me, it's not eureka yet, all right, because you are still susceptible or vulnerable to too many influences. However, I guess given the current emphasis of the government and the central bank on agric, if we pursue some of those action steps, all right, what you're likely to see is that we will create a much more robust and resilient economy, even though it takes a bit more time.
Yeah, but there are also concerns that there's too much emphasis on still primary production. Shouldn't there be an emphasis on industrialization? And like you said, power is extremely important.
Critical.
So, I mean, primary commodities, be it through agriculture or through hydrocarbon, yes, without being processed. We're still subjected to the vagaries of external markets over which we have no control.
But you have to start from somewhere. So let us first grow rice. There are 1 million plants that have been set up already, all right? So at least it will be processed. And then, of course, we will be more competitive, and there is no need to have imported rice, if you get the point I'm making. But you have to start from somewhere in the chain. And I think it's all coming together. The central bank governor recently insisted that banks contribute, if you like, all right, to a new fund which is being set up for agro and agro-related type businesses. And the whole idea is not just to support the primary end, but what do you do along the entire value chain, all right, so that way you have an integrated structure that will ensure that we start relying less and less on imported products. And it's going to happen. But the real point at the end of the day, irrespective of what you do, like you said, industrialization requires steady power. So we need to actually fix that problem. And if you ask me, all right, we're probably having issues with it right now, but I think it just requires a little tweak and we'll get it right. Because a lot of the investments have been done. Banks and entrepreneurs who've taken the risks ought not to suffer in the manner in which they are, because the longer and more protracted it is, the more painful it will be. All right, and I think once government can just pay just a bit more attention to it, all right, that will solve our problem.
Okay, and then let's move on to your bank and other banks too. They've placed, most of the time when I read the annual reports of banks, they place an emphasis on growing their retail franchise in order to diversify their base. But however, I seem to see a disconnect between, ensuring that there is deeper penetration and ensuring that more credit is extended to your retail customers. So you're trying to extend your retail franchise, but at the same time, a lot of your lending goes to high net worth and corporate customers.
Yes.
So why is it that up till now, even right now, with the new legislations that have been passed into law by the Vice President, that's the Credit Registry and Collateral Registry Act, do we expect to see a seismic shift in terms of banks now moving more credit down to retail customers and small businesses? Because really they are the real engines of growth, of economic growth.
I think seismic is too strong a word to use. A couple of action steps have been taken that you will start to see, that will ensure you start to see those shifts. First of all, the credit registries. Secondly, the use of BVNs, which means that if somebody defaults on a loan, all right, we can blacklist that person and he will not have access to credit in the system, which was critical. So forget even the issue of recovery. The fact that I can ensure that I don't lend to somebody who has defaulted means that that person can be excluded from borrowing in the system is a big deterrent. Now, thirdly, as banks are beginning to look for other ways to make money, think about even the EMTS exposure we're talking about. You need to have lent to God knows how many millions of Nigerians for you to have that amount of bad loan. Yeah. It's not even going to happen, if you get the point I'm making. So people are looking for more ingenious ways to make money, all right? And it is happening. There's increased agency banking. One thing I can tell you for sure is certain. The proportion of loans that is going to be lent to retail and SME names is going to be a lot more, all right, in 2017 than in 2016.
We expect to see that.
Oh, yes, you will see it. And in 2018, even a lot more. If you take my bank, for instance, our traditional arrangement was we're a wholesale bank, but we are now a large diversified bank. And we've invested significantly this year, all right, as far as expanding our channel and retail network is concerned.
Yeah, but I noticed that your loan book, was flat for half year.
It was flat because you have to understand that when you have a devaluation, all right, in the manner in which we did, it does not matter how much you lend to retail, all right, it is not going to be that significant. That's one. But more important, it was flat because we had to take some interesting steps to basically curtail growth because of the fluctuations which you saw in the foreign currency market. So there was significant pay downs on the foreign currency loans. We had to work on it. All right. So as far as local currency is concerned, it's not that significant. Okay. But we had to bring down the foreign currency loans because we're concerned about how the macro is going to span out over a period of time. If companies had significant currency risk, it's a problem. If current people were taking significant loans for trade, it is also a problem because if you like, as a country, the entire foreign currency we had and reserve management required that we had to start curtailing imported raw materials and all of that. So as a deliberate risk management process, what we did was to bring down a lot of the foreign currency exposure. But as far as local currency is concerned, you will see it growing. But okay. So that is why you saw the thing taper down, yes.
Let's look at financial inclusion. I know you play a major role as a member of the Bankers Committee. Financial inclusion in this country remains a major concern.
Yes.
And banks keep talking of spreading their digital footprints and what have you. What is happening with mobile banking? I mean, small countries like Kenya and several other countries in East Africa have succeeded with mobile banking. And that way, they've also used mobile banking as a channel to increase their pension assets. Yes. So what exactly is holding out?
It is happening in Nigeria. It is happening in Nigeria. If I take my own customer base, all right, in terms of those that use basically mobile telephones and things like that.
But that's to execute transactions. I'm talking of now bringing in more customers.
Correct. I have grown that customer base by 4 million customers. All right, so that didn't exist before. All right, so in my mind, it is happening. Remember, Kenya, Nigeria are different types of economy, if you get the point I'm trying to make. And in Kenya, it was more telecoms led. All right, but Nigerian banks are far bigger in terms of size. And the legislative issues are also slightly different, if you get the point I'm making. Now, however, having said that, okay, what you are beginning to see is increased partnerships, all right, between the banking industry and telecoms players to basically ensure that we reach out to the furthermost part of the north. I'll give you a simple example. How do you think farmers are paid in the most remote parts of Kebbi or in Sokoto? It's through mobile banking. Now, in the past, and I'm talking through...
And that's the anchors...
Absolutely. Absolutely. That is how it's happening. So that is where it starts from. Okay. And so if you look at it more and more people are coming in through the virtual banking aspects, all right, of most banks, just because of all of that. So financial inclusion is happening. But again, I keep saying you will see a lot more happening, all right, in the second half of this year and next year. Because as you now have these customers, the customer engagement mechanisms required for them to continue running their accounts and then, of course, uplift them from basic KYC levels, if you get the point I'm trying to make, into proper bank accounts will happen. And that's how it starts. Yeah. Nigeria is known, our industry is a very, very dynamic industry, more sophisticated than most markets in the continent. Perhaps the only exception may be South Africa. And when things like this happen, it happens like wildfire. I think you will see a big jump, all right, as far as the numbers are concerned, but not a seismic shift in the balance sheet, just because the larger names still control the significant portion of the economy.
In terms of volume?
Volume, yes.
Okay, and then I know that your bank has a very good relationship with Lagos State government and was involved in packaging in somewhat the Lagos Fourth Mainland Bridge, which has been cancelled. What led to that, and what is the next phase with respect to that?
I don't think it's been cancelled. I think His Excellency...
Well, it was put in abeyance of
correct.
sorts.
I think His Excellency, the Governor of Lagos State, basically decided to reprioritize given the recessionary times that we face. Okay, it is certainly not cancelled. And it's still an anchor project as far as his administration is concerned. He's probably revisiting the structures, the engineering, with a view to scaling down.
With the same team of consultants.
Yes, and asking himself, do I need it to be this elaborate, or what is the ambition given the resources available? I mean, obviously, sometimes you make plans and you run into significant headwinds. You need to revisit it, all right, if you are a cautious leader, to make sure that you don't run into any situation. So I think that is basically what has happened. I'm certain that he will continue, he will execute his period of stewardship.
Let's look at your role to what extent is Access Bank lending directly to farmers? Because you did talk about agriculture.
More and more. Not just farmers. We're looking at the entire value chain. We're looking at agro-businesses. We're looking at, I give you a simple example, lake rice, which is supposed to ensure that a significant proportion of rice in this country that is imported is reduced, is something that we are also supporting. Okay, and it's a collaboration between Lagos and Kebbi state governments. The rice is grown in Kebbi. You have the milling plant in Kebbi and in Lagos. You have the larger market out in Lagos. We are doing things and supporting different states that are engaged in agriculture or under the Anchor Borrower scheme. All right, we operate as an extremely responsible entity, and sustainability is a critical part of our existence. If we don't start to think Nigeria, live Nigeria, eat Nigeria, we have a problem. All right, and for us, the only way to do it is to lead by example. So we are investing a lot more as far as agric is concerned. And even if I say so, I think more and more of the banks, all right, are beginning, or at least the local banks, are beginning to look at it more seriously.
Okay, let's move on to the foreign exchange markets. The CBN governor has taken some significant measures since between February now, to stabilize the market.
Yes.
What more needs to be done to ensure that there is a convergence between, for instance, the I&E FX window and the spot rate? Because there's still a wide chasm there.
But in fairness, it's closing.
When is it going to close? Without devaluation, we don't see that happening.
No. It will close. It will close. And you can see gradually that the markets are closing out. Look at the unofficial market that had such great disparity before. Yes. What has happened? That market is almost wiped out. It's almost closed out totally. Because most of the people who had to go to that market now have access to the formal market. The small and medium-scale enterprises, what the governor did was to establish a mechanism for them to come into the formal market, and therefore there's less pressure on that other market. That's the starting point. Now, as more and more investors get into the I&E window, I can't even remember what the volumes are, but it's almost $2 billion.
As of week before last, $4 billion.
About $4 billion, thank you. Now, as more and more investors see that that market is real, all right, what you then start to see is basically that whole thing closing up. And I'll share a bit more with you. You know, when you talk about stabilizing the system, you also have to ask questions about the local industries, all right, and what do you need to do to make them sustainable, at least in the short run, if you get the point I'm making. Now, I think one of the things you see and why people are still able to access money at a different rate, if you like, all right, is that those are for priority sectors, for manufacturing concerns, if you get the point I'm trying to make. So let us support those people who are producing locally, using local raw materials, all right, let's get them more competitive, and gradually that whole thing would happen. It's also expected that as more investors bring in money through that I&E market, all right, that market will firm up. And before you know it, all right, you can see that convergence.
You anticipate more appreciation in that market,
yes.
and then that convergence
would happen.
Would happen.
Yes.
Okay. Let's move on to the dynamics of the financial service industry. In terms of direction and growth, what do you think is going to be, what do you see as the forecast for your sector in terms of NPLs and what have you? I know there were concerns. I mean, the IMF and the World Bank had some concerns. There were even some credit downgrades as of last year. Would you see this changing now that?
I think a couple of things would happen. You don't just come out of a recession and nothing happened. You will see a spike in NPLs, particularly as loans season, all right, in the banks. Okay?
You reckon there will be a spike?
Oh, there will be a spike, naturally.
Even though we're exiting the recession?
Yes, because, you know, some of those loans will just be maturing, all right? So you will see a spike, and then it will get better. Okay, so I think what you're likely to see, depending on the risk management philosophy of the bank, you will see a spike, if you like, between now and the end of 2018, if you get the point I'm making. But I think the banks are certainly in a much better position to handle it than it happened during the last exercise that happened in 2007 and 2008. Now, so it will cut across sectors, but more in sectors where you have people who require imported raw materials to support production, just because they had difficulty having access to foreign exchange to produce, and apart from being able to pass the cost finally to the buyer. So that is likely to happen. But I think banks are going to look at other ingenious ways of making money, doing a bit more retail, lending a bit more in the retail space where you have a wider margin, in a much more structured and secured manner, all right, pushing cards and all of that and their channels, all right, so that they find replacement income for all of this. So I think 2018 will still remain a year of muted growth for banks, all right, but I think right after that you will see a return to the yes. But the stronger banks will continue to do well because banks still have, for the strong banks, still have strong capital adequacy levels, still have strong capital to support themselves, you know, and all of that. So I think in overall, you know, the banks, the industry will play out better.
Something that there seems to be some silence on it. I don't know whether it's some collective silence in the industry about the bank's exposure to the power sector. What has happened to a lot of those loans, which are actually, so have there been provisions for for all these people that acquire the privatization assets and saying they cannot pay for them? What exactly has happened to them?
You can't tell the banks to provide for those loans right now. I'll just take you back in time. It's a very important issue, and it's a national issue. It's a national issue because it is critical, like I said, all right, for our economy. And the banks that were sufficiently patriotic to support investments in power need to be given time to manage those exposures. Some of the problems that have come out of those exposures are not actually out of the banks. It's actually out of a fault in the implementation of the power policy, if you get the point I'm making. Okay. Now, having said that, of course, there's also the issue of systemic importance and relevance and what you need to do about depositors' funds.
Yeah, but also the operators are partly to blame, especially the distribution companies.
In what sense?
Well, they generate income and they don't pay their loans, neither do they even pay for the power.
Transmission issues, that pricing issues.
Yes, they don't even pay for the power that is transferred, that is sold to them by the gencos.
But there are pricing issues. What is the role of the bulk breaker? Remember that the bulk breaker is supposed to buy the power from them. It's supposed to free them with liquidity for them to pay all of that. So there's a problem in that value chain. There's also a problem with pricing, final pricing of their product. All right, and which everybody needs to look at. There's a problem with power, access to gas, so several little things need to be resolved. But this is not the first time it's happening. Remember in the 80s that the government had to basically step in, and that was how the creation of prudential guidelines came up. All right, I think the government needs to revisit that whole sector in terms of people who are exposed to that sector and create some form of reprieve for them to work it out, okay? And then for things to go right, because that sector is an extremely sensitive and critical sector for the industrialization of our country. Now, if you treat it otherwise, what you then do is to create a collapse in that sector, and it is worse for all of us. So I think it needs to be managed, and I think the government will do that.
Okay, thank you very much for joining us.
Great pleasure, Ijeoma. Thank you so very much.
Bye.
Thank you.